Good morning and welcome to the 100 Black Men of Las Vegas Youth Economic Empowerment class. I'd like to welcome all of our guest speakers, partners, and mentees today. This morning, I would like to introduce the 100 team. We have Mr. Daryl Rayford, who is CFO of the 100 Black Men of Las Vegas. We have Mr. Clifton Hines, who is the Economic Development Chair. We have Mr. Russell Whitmore, who is our technology chair, and that is who we have from our side. On our partner side, Wells Fargo, we have Miss Jane Pavick, and we have Mr. Christopher Hernandez. And Mr. Hines will tell you a little more about Mr. Hernandez. Take it away.
Well, good morning, and happy to be here this morning. I'm hoping that you guys are getting a lot out of these sessions, and it's being very helpful for your future. This morning, we have Mr. Christopher Hernandez. He's a regional banking manager, and he's based in Las Vegas in the Summerlin office. He oversees operational activities, executes on short and long-term branch objectives, hires, manages, and retains employees, fosters deep customer relationships, and support enterprise initiatives. And he also regulates the branch risk levels. So ladies and gentlemen, please welcome Mr. Christopher Hernandez.
Hi, everyone. Good morning, and thank you for having me. Very honored to participate and share a little bit and meet all of you today.
Great. Good morning, everyone. This is Jane again. It's really good to see everybody on the phone and see so many familiar faces. Miss Rhonda, were you going to take roll call, or do you want us to just get into the lesson? You're on mute, Rhonda.
Yes, I'm going to do a quick roll call. When you hear your name, please say present, so I'll know you are here. Mr. Adam Crocum. Angel Pretty.
Here.
Anthony Jimerson. Anthony Walker.
Here.
Anthony White. Brooklyn Maddox.
Yeah.
Cameron Reese. Christian Marino. Eli Camacho.
Here.
Geneva Morales. Halima Smith.
Here.
Herbert Campos Reales. Jalen Taylor Estes. Jocelyn Haas. Josiah Jimerson. Kaylin Hines. Kaylin Reese. Mazon Hagler. Miles Whitmore.
Not here.
Nas Thompson. Nasir Thompson.
Here.
Nevia Eason. Osaradan Ugbagmo. Pharaoh Washington. Russell Whitmore. Tristan Sonatas. And Yirey Garcia.
Here.
Okay, great. If I did not call your name, please let me know. I see Kaylin and Cameron. Let's see. Oh, and I have some notes in the chat. Okay, great. I think we're ready to go. Take it away.
1 second, everybody. I just wanted to welcome everybody, and I'm so proud of the youth, as Mr. Hines said. You guys are doing it. I mean, it's great. Take it away.
Fantastic. Well, thank you, and good morning, everyone. We've had some really good sessions over the last 4 weeks, and you guys should give yourself a big pat on the back for showing up and for being here and committing yourself to learning more about all the different aspects when it comes to managing your money and your financial future. And like we said before, this is building that foundation. Just to remind you what we've talked about managing your money with a spending plan. Last week, we talked about savings and checking accounts and how to open the accounts, how to use the accounts to manage your money, and the advantage of saving and growing your money while you're keeping it safe. And just a reminder that as you guys attend these classes, at the end of it, you'll get that reward of a match of $200 to go into your savings account. So this week, we're going to talk about credit. And basically, that's borrowing money. Now, my good friend Christopher, who's here, he manages a branch and he's worked in the banking world for a long time. So before we start the actual lesson, Christopher, is there anything that maybe you can share about your branch and how big your team is and where you're at in Las Vegas, so that if the students have any questions, they can, or if they want to stop by with their friends, their family, they can?
Yeah, of course. So again, good morning, everybody. So I managed, so I'm a branch manager and I have a team of, I believe, 10 individuals, which is a combination of tellers and personal bankers. A little bit different there, but in those specific roles, what we're intending to do is to have great conversations with clients, such as yourselves, and really build towards building a strong financial future to see how our services can help you. I managed a branch in Sun City, Summerlin. So it's on the corner of Lake Mead and Del Webb. So you guys are more than welcome to come in and visit at any time. I've been with the bank for about 10 years now. Actually, I'm born and raised in the Philippines, and I've been here for about 15 years, just to give you guys just a little bit about me. And I think that's about it. I have 2 kids, and just like with you guys, having those great conversations is something that I intend to do, or have already started with my kids as well, because managing credit, which is our great topic for today, it's really something that's going to help us all in the future with the things we want to help accomplish. So great job being here today. And again, thanks for having me.
Fantastic. Thank you, Christopher. And I know that some of you may have already reviewed this lesson this week. So good for you if you've done that. We're going to go through it together and we'll stop it periodically like we did last time. And then Christopher will talk about some of the key points. And if you have questions, take yourself off mute and ask the questions, or put them in the chat. I don't have access to the chat because I'm running the program, but Christopher does have access to see the chat. So feel free to put any questions or comments that you want in there. So I'm going to go ahead and start the introduction piece.
What's the first thing you think of when you hear the word credit? Let me guess. Credit cards, right? You hear the word all the time, but did you ever ask what the word
Hold on, let me. I think we ran into this last week too.
You hear the word all the time, but did you ever ask what the word credit really means? To put it simply, credit is about borrowing money. You know, like borrowing money to buy something now if you don't have the cash yourself. Think loans. Think credit cards. It sounds great, doesn't it? With credit, you don't need to have money in your budget. You can just borrow it, right? Sorry, wrong. I mean, halfway wrong. As you'll see, yes, credit gives you purchasing power, but only if you respect it. If you do, you'll have what they call good credit. But if you go out of control with your borrowing, you'll have bad credit, which can seriously affect your future. Let's check out the difference between good and bad credit and why you should care.
Oh, I'm sorry, my internet connection is unstable this morning. It'll work though. Here we go. So
When was the last time you borrowed money? Last weekend, I borrowed money from my friend Alicia to share a pizza. I think I paid her back. Anyway, she'll tell me if I didn't. Alicia didn't hesitate lending me the money because she trusts me to pay it back. I mean, neither of us has a lot of money, so trust is really important. Imagine if Alicia or I went to the bank to get money for what we really want. Something expensive, like a computer. Banks will lend you money, but only if you have a good credit history of paying money back. So here's the question. How can you establish a good credit history? Where do you start?
Okay. So Christopher, where do you start? Do you want to talk about the what it means to have good credit and to promise to pay either a loan or credit card, and how do you guys look at that at the branch?
So one of the things that I always encourage clients to do, especially when they're much younger, is to start off. A great way to start building some history with the bank, and you guys spoke about this last week, is to establish some sort of history with the bank through a checking and savings account. Eventually, as you guys mature, get a little bit older, you can start to apply for credit. And usually, the easiest way to get credit is if you sign up with an adult, typically with your parents or somebody to consent, or if you've built enough credit or history on your own through the bank side, you can apply for credit once you hit 18 years of age on your own. The nice thing though the great thing about starting in a checking and savings, and I always encourage our clients to do this, what I've seen in my experience is that the young adults that are able to manage their checking and savings accounts really well, it really propels them to manage credit in the future because they're aware of the financial responsibility of using your money that you have, and being responsible, setting aside money in a savings account. Throughout our lesson, what you'll find is that credit actually, and it was mentioned, one of the things I always tell my clients is that with credit actually isn't additional money that you make, right? So that's one of the great tips that I'll give you, because it was mentioned that we'll be able to have some purchasing power, right? It's going to allow you to borrow money today and maybe go out and buy some, I don't know, buy us dinner or something, right? But at the end of it, after a while, you're going to have to pay that money back. So although you can spend the money today, does not necessarily mean that you've already, quote unquote, made that money already. So I think that's my best tip for you guys at the moment. Hope that helps.
If I could chime in, Chris, one of the things that Chris said was trust. Credit is predicated on trust. You like that word, predicated? Write that down. But trust. And one of the things he said is establish a checking and a savings account. They're not going to be with you. The bank is not going to be with you day to day. But one way for them to assess you is how your interaction is with your checking account and your savings account. Because, Chris, tell them, if I have no indebtedness, is that good credit?
I didn't hear the full question. If what? Sorry.
If I have never established a relationship and never have created indebtedness, is that good when somebody's assessing my credit?
No.
No, right. Because they can't trust me because I don't have no history, as Chris said, whereby I borrowed and I paid back. So I just want you guys to understand what Chris is saying. You got to establish a history, which will encourage the trust. Thanks.
Right. And so, Chris, can I ask a question along the same lines as Dr. Rayford? When you talk about checking and savings account and establishing that relationship and that trust, part of it is not writing checks or making debit card purchases for more money than you have in your account, correct? So not writing like a bad check, which means you write a check for money that you don't have in your account. So that's one way to establish the trust and the relationship with a financial institution. Is that right?
Yes, absolutely. So, we talked about trust. We mentioned responsibility, not spending, not writing a check, or not spending with what's in your account. When you have a checking account, it allows you to have access to a debit card. And the debit card, and as we all know, allows you to go to a store and utilize the money that's in the checking account, right? But in order to build trust and to show responsibility, one of the things that as clients or owners of the account, right, when you are the one that manages the checking account, is that we are diligent in spending the money that we have. So if you think about, if you look at what's in your wallet and you open it, you have $50, you have $100, you have $200. That's the amount of money that you can spend at that time. And when you start to manage your checking account and savings account, you want to be extra mindful in making sure that you spend within what's available in your account. It was mentioned last week that when you think about writing a bad check or using the debit card when there's not enough in there, a lot of times that's when some of the fees can come up, and it also leads towards not building that good trust or history when you're utilizing your bank account.
Perfect. So are there any questions in the chat, Chris?
No questions right now.
Okay. Does anybody have any questions, or does anybody want to share when you've lent money to someone, or maybe a friend or your sister or your brother, and then they paid you back? Anybody want to share any experience that you've had? I'm looking at the screen. Okay, we'll go on to the next lesson then.
One way to begin establishing your credit history is by using credit cards. So let's fast forward a few years. Let's apply for a credit card. Okay, so imagine you're old enough to get your own credit card. What will you need to show the bank that you can pay their money back? First, they'll want to know the income from your job, and second, they'll want to see that you have a history of paying your bills. This information helps the bank determine whether you're responsible enough to pay back your debt. Let's say you have a job and pay your bills, and you get a credit card. Life is good, right? But here's your first surprise. Credit cards have spending limits. And for your first card, the limit won't be much, say a $300 limit. So you can only spend to your limit. And remember, with credit cards, you're borrowing money. Each month, you'll get a bill for everything you spent. The bank or credit card company will ask you to pay a certain amount, which is called the minimum payment. Usually, if you pay the total amount, that's fine, and you're done. But if you don't pay it, well, here's the second surprise about credit cards. You'll owe the bank interest. Remember that word? With credit, interest has another side to it. Interest is a fee the bank charges you for borrowing their money. If you're borrowing money, interest works against you. If you're saving money, interest works for you. The interest rate for credit is expressed as an annual percentage rate, or APR. The bank may also charge an annual fee or yearly charge. And there's another charge you may have to pay. It's called a late fee, and you may have to pay it if your payment doesn't arrive on time. Late fees can get very expensive.
So Chris, last week we did talk about savings and how the bank pays people to put their money in there in the savings account. But sounds like with credit, when you either have a loan or you have a credit card, you're paying interest to the bank, or maybe it's like Visa, American Express, you're paying interest to use that money. Is that correct?
Yeah, so in the lesson, we touched on that a little bit briefly, and I'll expand on that a little bit. I try to use a simple example with my clients as well, and I try to use it in some of my conversations. So we talked about having a credit limit, right? So you apply for a credit card, get those nice little shiny Visa cards that allow you to borrow the money and spend it, right? And typically, I'll share with you guys when I actually had my first credit card, my credit limit was only $200. But I was extremely happy because it allowed me to start to build my credit a little bit more fully. So the idea with using your credit limit and making sure you pay it back is, so in my example is, if we had a $200 credit limit, right? If I charged $100 to buy us all dinner, I'm gonna get a bill in about 30 days for the $100, okay? My responsibility is to make sure that I do a couple of things. Number one, obviously, I pay it back. Number two, I have to pay it back on time, right? I can't pay it back like a year from now. It's not really helpful. So I want to make sure I pay at least what's the minimum amount, and I also pay it on time as well. And that's really what helps us build credit, is our ability to stay on track and say, okay, I borrowed $100. It's due on this date. Okay, I'm going to go ahead and pay it. Now, with what Jane had mentioned, and this is one of the things that we want to make sure we're very mindful of as well, is that the banks, in our example, so if I charged $100 and my minimum payment is only $25, let's just say I paid $25, right? So I did hit the check mark and I paid it on time. So good, so good. I'm a good paying. I'm hoping to build that every month, right? Pay on time. But the $75, right? So that's the unpaid portion of the $100 that I used. The $75 will get charged interest on that. And in the little example, that's the interest rate that the bank's charging on the unused portion that I didn't pay. So in order to make sure that I'm managing my credit well, I have to do a couple of things like I mentioned, right? Pay it on time, make sure at least pay the minimum payment. But I also want to show that if I used $100, which is what I can borrow at that time, I want to make sure that I show the banks, right, trust and responsibility, that I have the ability to be able to pay that $100 back in full. So little tidbit right there.
And one thing that's probably important is to make sure that when you decide you're going to use your credit card, or when you're going to take a loan out for something, that it's something you really, really want, if you're going to be charged interest or paying a little. So you may think $100 for the dinner for family, that you deserve it, that we're going to go and celebrate something. But in the long run, that may actually end up costing you $120 because of the interest that you pay on it, correct? So it's important to decide whether you really, really want whatever you're going to buy. Maybe it's a computer. And, you know, there are certain things that you're going to buy that will actually help you earn more money in the long run. Like you need a computer for school and to get through school. So that you could look at as an investment, but you are still going to be paying interest on whatever outstanding balance there is. So just, it's always good to really think about whether you need that loan or you need to charge something on your credit card when you do get a credit card.
Yeah,
So yeah.
if I could add to that, Jane. Last week we talked about the flow of money from the federal government. The federal government lends banks money and the banks lend people money. What I want you guys to understand is the interest on money is really a cost to borrow. So, like for a car, you may pay if you got good credit. And I don't know, Christopher, you could help me out. You may have to pay 4% or 5%. On a house, you may have to pay 2.5% or 3%. The federal government is lending the banks at 0% right now. So there's a 2% profit for the bank. However, on a credit card, and I want you guys to understand this clearly, on a credit card, there's other factors. And one of those factors that I want you to understand is some people don't pay back. So credit cards got to recover some of their money through the people who pay. So that's why you may ask your parents, and that's why I ask you to talk to your parents, why is the interest rate on credit cards higher than anything else? Well, people don't pay you back, and credit card companies have to recoup their money. So I'll use me as an example. Like Jane said, you go out to eat, instead of it being $100, it may cost you $110. Well, what I do is I have a Southwest credit card where I want points, where if I accumulate my points, I could fly for free. So therefore, what I do when I use that credit card, I pay it off that evening. So I don't receive any interest. So I utilize my credit card and I pay it off that evening. I'm hoping I don't confuse you, but I'm managing my money. All right, that's all I got to say.
Those are really good points, Daryl. Thank you for bringing that up. So with some credit cards, and Christopher probably has more stories than I do about this, but with some credit cards, you do get certain perks or certain benefits from using it. But, you know, again, like Dr. Rayford said, he pays it off before he gets charged interest on it. So you do have the ability, and this is why it's important to read all the statements that you get from before you open either a credit card or get a loan, but read, you know, what options you have and how you can manage it, and, you know, really decide if that's going to fit into your budget. And remember, we talked about budgets a couple of weeks ago with Miss Olivia, and one of those fixed expenses could be your monthly, like if you have a loan for your car, could be your car loan. If you know that you want to use your credit card every month, maybe for rewards, put that in as a fixed expense and don't go over what you budget unless you absolutely have to, unless there's emergency. Maybe you need to buy tires for your car, and that's something that's unexpected. But all the different things we've talked about over the weeks, they all kind of blend together, and you can use all of this information to really figure out what's best for you and your family and how you're going to manage your money. And Chris, I don't know if you have some additional points about managing the money and managing your credit and your credit cards. Is that things that most credit cards, can you access their statement online, or is it all paper statement?
Yeah, so that's a great question. Well, obviously I work for Wells Fargo, but when you get a credit card with an institution, there's a lot of great tools and convenience features that you'll be provided, and one of them is being able to access the account online to be able to help manage the credit, be able to check your balances, be aware of when the payment is due, how much you need to pay. And there is an option to be able to receive the statements either in the mail, but everybody right now very adept at checking things online. So for me personally, I do a lot of my credit management, just everything is just through online. It's a lot easier to be able to just check on it on the spot and see if there's anything incoming or outgoing as well. And then Miss Halima had a question in the chat. Was asking how much time do we usually have until the bank declares that you're late to pay your bill? So it's usually at least 30 days. before it's reported to the credit bureaus. But but in order to kind of build that history and trust, you do want to make sure that you're showing that you're paying on the date that it's due.
This is Rhonda. I have something to chime in about that. If the credit card company sends you a bill and your due date is the 15th of every month, you must pay by the 15th. And you must pay by the end of that business day regarding that bank. Every bank is different. So I'll give you an example. Capital One, if you have a Capital One credit card and you have to pay by the 15th and you live on the West Coast, then you need to pay by 3 p.m. Pacific Standard Time because their banking system is on the East Coast. So if you pay at 4 o'clock, you are late because on Eastern Standard Time, that is 7 o'clock at night. So be very aware of if you have a credit card, where the banking system's headquarters is. What I always like to tell people is pay your credit card the day before it's due. Then that way you will never be late. And if you have a checking account, you can pay your bills automatically. You can set it up for auto pay to pay your bill the day before it's due. But do not pay it the day after because you will be late and it will show up on your credit report as late and it looks like it's 30 days past due. Even though you were only late one day, it does not say that on the credit report. A 30 comes up on your credit report and you'll be 30 days late. Thank you.
That's a great ad too. Keep it really simple, right? If you think about the timing, where the bank is, where you are, keeping it really simple. And that's where the trust and responsibility comes in to make sure that, hey, it's due on the 15th. I want to be very mindful. I'm going to pay it in the 14th. And that's that. How many of you guys raise your hand if if we're submitting homework and homework is due on the 15th and you submit it on the 16th, is it considered late? It's considered late. So it's the same thing with making sure that we're managing our credit. It's a responsibility. We want to show that we're able to pay it on time. And keep it simple. Whatever process you have in place, pay, keep it simple. Just pay it a day before. Great tip as well.
Yeah. And I think Miss Rhonda's example of paying it online is a really good way to pay your bills. But if you do have to write an actual check and mail it in, you're going to want to mail that check in probably 5 business days before it's due, because of the time it takes to get through the mail. So you do have, options of writing a check for it. But, even if you write the check 2 days before it's due and you mail it, if they don't get it until 2 days after your due date, it's going to be late. So you'll want to factor that in on how you pay it too. So that's a really good point, Miss Rhonda. Thanks for bringing that up. Are there any other questions in the chat? That was a great question, Lena. Anything? Okay.
No question. Sorry about that.
Bad credit can cause you big trouble. And if you don't pay your credit card bill on time, that's what you'll have. And it's the same if you miss payments. You may have to pay even higher interest rates. Paying late or missing payments results in bad credit. So maybe you're thinking, why not get another card so I can have more money to spend? Well, it's not that easy, and it's not smart. Any other credit card company will look at your credit history to be sure you're a safe bet. So think about it. Having good credit is the key to getting things you want. A car, an education, a house. Good credit just makes sense. Bad credit is something you should definitely avoid.
So, Christopher, maybe you can share about what a credit report is and how good credit and bad credit affects that.
Yeah, so just like, so a credit report is essentially just a history of how you've been able to manage your credit. And when we say managing our credit, it's a record of how you manage your credit. And there's a couple of things that are composed in that report. A big factor on that is a record of if when you've how consistent you've been in making payments on time. So when we talk about bad credit, right? When I started out, I started out with a very small credit card, $200, right? Basically, if I've shown the ability of how to manage a $200 credit card, in the future, what's going to happen is if I try to apply or add a different type of credit, they're going to look at that history and say, hey, Chris paid on time. He's able to manage $200 credit limit. I think we can trust him a little bit more. Maybe this time when he applies, probably get $1,000 for the next time. And then from $1,000 grows up to about 2,500, 5,000. And that part is just an example, okay? So taking care of your credit, it's actually a big responsibility because in the future, a lot of us are going to start out and want to buy, things that we need, of course. But I'm sure every one of us is going to want to buy a car eventually, right? Buying our first car, right? So that's a big thing. You're going to need credit in order to do that. Next thing in the far future is eventually you're going to want to buy a house, right? Buy your first house. So everything that you do today, or when you've started to credit, when you're managing your money, it does make a difference for us in the future, because it's a history of how well we've been able to manage that big responsibility. So pay it on time, keep it simple, make sure you're managing it well. And, it was mentioned, there's a lot of great online tools that are offered so that you're on the spot being able to be mindful and managing, making sure you're up to date, and you're being mindful of the dates of when you need to pay it as well.
And isn't it true? So the bank will run this credit report. So say I go into your branch and I ask for a loan to buy a car, or even a loan to buy a car. You will ask me information about how much money I make and other questions about me. And then you ask for this report, and this report comes to you and shows how I've paid on maybe my cell phone, or how I've paid some of my other accounts. Like if I have a credit card at Macy's or at Best Buy, it'll show how I've paid those bills, right?
Yes, absolutely. It doesn't, when you come to the branch and sit with me, I physically will not have access to that, but we have a certain team and they're called underwriters. Those are the employees that are responsible for reviewing our credit applications or your credit applications. And that information is available to them. And they make a determination if we're going to lend you, let's say, $10,000 to buy this car. They're going to make a determination and say, okay, Chris, let's see, let's take a look. Okay, does he have a good history of paying his bills on time? Yes, hopefully yes, right? Okay, Chris has a pretty good job. Okay, he's not going to spend too much money. He's able to pay bills. Is he able to pay back this car loan? Yes, check. Take a look at his relationship with the banks. That's a little bit of a considered factor. Okay, pretty good balances, check. So that team, when they look at our reports, if there's bad credit, like bad history, it might make them a little bit unsure of saying, hey, I'm not sure if he's going to be able to pay it back, because previously, yeah, he skipped payments here and there and he's a little bit inconsistent. So yeah, really taking care of our credit, it does matter in the long run.
Okay. Yeah, thank you. And it's credit's something that you build up to, and again, that you really want to ask yourself if you really need it. And one thing you guys should be thinking about, and maybe some of your older brothers and sisters or even your parents have went through this. As soon as I turned 18, I got a letter in the mail from Macy's department store, and they said, do you want to open a credit account, and they were they also included like coupons to go shopping. And I was 18 and I thought, yeah, I want to go get some new clothes. But my parents and I had not talked about how credit is and paying it back. So I went and bought a bunch of new clothes, got the bill, and I didn't pay it. I didn't pay it for like, probably I missed 2 payments. And then they started adding on the late fees. And I finally asked my parents about it, and they said, you need to pay that back. And so I was working at the time, and I started just paying back as much as I could. But it took me a while to get to the point where the bank would trust me again to give me another credit card. So just know that when you guys turn 18, you're probably going to get, some different companies will contact you and say, hey, open this credit card again, because you'll be paying them money in interest for using that credit. So you really want to think about whether you need it, whether it's a need, you have to have it to survive, or whether you just want it. And if it fits into your budget and you want it, then you can, purchase it. But that happened to me when I first graduated from high school. So might want to be prepared for that. Are there any questions in the chat, or Dr. Rayford or Miss Rhonda, do you have any stories you want to share?
Yes, be very careful with credit, and be very careful with the decisions you make about buying things. When you go shopping and you see the new dress, you have to say to yourself, oh, do I need this dress or do I want this dress? Now, it's a difference. You may say, hey, I have a dance I have to go to at school and I need a new dress. So then you may purchase the dress because you need it for the school dance. But you may say, hey, I see the red dress, but I don't really need it right now because I don't have anywhere to wear it. Well, then you don't purchase it right now because you don't need it, right? And then when you purchase your dress, say your dress costs $100. To help build your credit, you can do 2 things. You can do like Mr. Rayford, and you could pay it off when the bill comes. When the bill comes, it will be $100 plus $6 in finance fee, so it'll be $106. So you could pay it off at once. That's how Mr. Rayford does his bills. He doesn't like to carry balances. Unfortunately, if you don't have the $100, you could pay $25. But what I do, and you could break it down into 4 payments. But when you break it down into 4 payments, they will charge you a monthly interest fee. So if I get the first bill and it's $106, I would pay $25 plus the $6. So I pay $31. So I'd pay the interest off and I'd make a payment. And that's how actually I pay my bills when I decide to do them in it's called installment payments. That's how I do it. So you could pay $31 for 4 months, and then your whole bill would be paid off. The credit card company would be happy with you, and they would say you were a good credit risk. And that's how you build credit. Paying off the balance in one swoop is really good. And if you have an American Express credit card, that's what you'd have to do because the bill is due in 30 days. But your traditional MasterCard and Visa cards, you can pay a monthly minimum or you can pay more. So it just depends on how much money you have in your budget. Okay, that's all I have for that subject.
Thank you.
Thank you, Rhonda. I also want to add something, Jane, if you don't mind.
Yeah.
One of the things I want to get into you young ladies and gentlemen's head is the fact that you are just like Mr. Chris. You are a banker already. You lent somebody $5, you lent somebody $10, and if they didn't pay you back, you did not give them credit again. So understand that you're already a banker. So be wise on how you do your transactions, your activities, manage your money, because you will need to go to the bank for a home loan, for a car loan, for whatever. And then a lot of times when the bank doesn't give us the loan, we suck our teeth, we hem and haw. No, they're doing the same thing you were doing when you said, no, I'm not going to give you any credit, Bobby. I'm not going to give you any, well, you're not saying credit, you're saying, I'm not going to lend you $5 anymore. So that's what I wanted to kind of impart upon you, you're already a banker. Thank you.
Perfect. Thank you. Chris, any questions in the chat?
Yeah, we had a few questions, and I was trying to
Okay.
respond to Herbert. So one of the questions from Alima was, the different banks put different amounts of money in your first credit card. Answered, yeah. So it kind of depends on your application. So at the time you do the application, it's going to depend on a few things, right? Your relationship with the bank, your current credit history, and your ability to repay, right? So definitely when you have a job, that's your ability to pay things back. Definitely helps towards that. And I believe that was mentioned earlier today. Herbert did also ask, is there a way to cancel your credit card so you can apply for another one? So I was trying to figure out a good way to answer this. So the answer to your question, I mean, is yes, you can always cancel your credit card, and you can apply for another one. But we want to just be very mindful of that, because when we apply for credit, it's not always guaranteed, right? Um, because it's determinant on all of the things that we talked about, our ability to pay it back, our history, our relationship, and so forth. The other thing to be mindful about that, Herbert and guys, is that, when we start our credit card, so that credit card that I started out with, that $200 one, I still actually have that card because it's the first card I ever started. And I started that, I think 15 years ago. So for me, when I started out with that card, I've had 15 years of history on that specific card that I've been able to pay and manage it well. So if I did close that card, some of that history from 15 years ago is going to go away, versus if I started a brand new credit card, let's say 2 years from now. So we don't want to be too careless in saying, okay, I have this credit card, maybe I'll cancel it and start a new one. Because one of the things we did, I'm just realizing, we also want to mention the length of time that we've had credit. That's why, we always try to encourage, it's a great idea to start out early. But when you do, you want to make sure that you understand the responsibility, because the longer you've had a history of paying things on time and managing your credit, the more secure that decision to lend to you is in the future. And I was just going to add to that point a while ago too. If we've ever, you guys say lend me like $5, right? $5 or $10, right? And it comes due on Friday. I'm supposed to pay you $10, and I come back and say, hey, I can't pay it. I can pay you $1 today. Would that be okay? And you say, hey, yeah, that's fine. In the future, right? If I come back and I say, hey, can I borrow $10 again? I really need it. How would you feel about lending me the $10? $10, I should say. You'd probably be like, pay me the $9 first, and then maybe I'll pay you the $10. maybe I'll lend you another 10.
So, Chris, are there special accounts or credit cards for students that Wells Fargo or any other banks offer, like to help get people, to help students establish their credit?
So, yeah, to your point, Jane, right? So when we're 18, we're able to apply for credit on our own. And typically that's when some of the retailers send out correspondence to us to invite us to apply for credit. One of the things that's helpful when you have the checking and savings with the bank is that it builds a different sort of banking relationship, banking history with the checking and savings account, so that when you apply for your first credit card when you're 18, it helps to determine your ability to manage your account. Typically, depending on the institution, there are certain credit cards that are a little bit more specific or geared to younger adults or to individuals that are starting out with their credit. You just have to do a little bit of research. Best way is to check it out online as well.
Yeah. And probably ask questions too. Talk to different companies and And maybe even if you trust one of your, family or friends, you can ask them about what they've done, but definitely ask questions, right?
Absolutely.
Speaking of questions, are there any more questions in the chat?
Yeah, so Herbert followed up and he said, "Oh, so if you cancel your credit card, some of your credit history vanishes and you have to restart." So with our credit, if you guys, I'll give you guys just a little bit of background with our credit report, okay? When we talk about credit bureaus are you guys familiar with the credit bureaus? There's actually three major ones. You probably heard it. You have Equifax, TransUnion, and Experian. Okay. Those three companies, they're companies that all they do is they gather information from different institutions and different records of how you paid your bill, how you managed. And basically based on all of those records, they have a model, but they come up with this report that determines your score. So I want to just make sure you guys kind of remember that, right? Everything that they gather from those institutions helps determines what that score is. So to answer your question, Herbert, it could affect it because if you close your credit card or if you close that specific credit account, that history of you paying eventually is going to go away. And the other thing too is you're not going to have anything going forward that you're paying that specific credit card. So coming back to your question, and I mean, it is certainly a possibility, but you want to make sure you're a little bit more mindful because the history that you've built up with that specific card, especially if you've managed well, you want to make sure that's contributing to that report that the bureaus tabulate to give you your score.
And one other thing that I learned, because before I did the job that I'm doing now, I actually was a mortgage loan officer. And so I would help people get mortgages, so a loan to buy a house. And one of the things that we used to look at is inquiries on credit reports. And so those reports that lenders get that show how you've paid and who you've paid, if you apply for a lot of credit cards, you'll get an inquiry on your report. And that sometimes can be negative because a lender may look at that and say, why is this person applied for 10 different credit cards? Did they get the credit cards? Are they going to charge a lot? Or, what is it? So asking questions about the different credit options out there is one thing, but when you actually apply, they will run a credit report. That inquiry shows up on your report. It could negatively affect you. So be very careful when you're applying for credit too. Don't just randomly do it. Just think about, do you really need that and want it? But you can still ask the questions and get the information without having to apply for a credit card. So any other questions? We'll go into the next lesson. Okay.
I'm saving for some things I want right now, and a credit card would sure make it easy to get them. Let's say I finally buy a game console. If I didn't save up for the game console and instead bought it with a credit card, how much would it cost me?
Okay, so we've got a question we're gonna try to do. I don't know if you guys did this when you did the lesson on your own, but I might need your help to answer this. So Alex is buying a game console for $199 plus 6.5% tax. He decides to pay for it in 2 equal installments on his credit card. If the interest on the credit card is 18% interest, how much interest will Alex pay? So we round up to the nearest dollar. So the first thing we have to, and we'll use the calculator above to help, but 199 plus 6.5% tax is what, about $205 is what it actually costs, right? we'll use this credit calculator. So the amount we're going to borrow, I'm going to put in 205. And the interest rate, I think they said was 18%. And monthly 2 equal installments would be about $100, right? Let's see what it comes up with. So it would take 3 months to pay. It would actually cost $210, and your total interest pay would be $5. That's what this one says. So if the interest on the credit card is 18, how much interest will Alex pay? So do you guys think I should go put $5 down or $6? You could put it in the chat, and Chris can tell me what you guys are putting in the chat. Or you can take yourself off mute and just shout out what you think I should reply.
Yeah, a lot of 5.
Okay,
5 from everybody.
I'm gonna go for 5 then. Woo, correct. Good job, you guys. So, I mean, you know, what that is showing you is that you buy this game console for $199 plus the tax, but you're actually paying $5 in interest if you put it on your credit card. So that's where you have to ask, is it worth it for me to spend basically $5 extra so that I can have this game console? So any questions or comments on that? Nope. Okay, let's go on to see what they say about loans.
Adults also use banks to purchase big ticket items like cars, homes, or education. Again, if you have good credit, the bank can help you with a loan, which is another type of credit. Loans are different from credit cards because they're for a fixed amount and are usually for a specific item. Plus, once you pay off a loan, it doesn't renew itself. Remember, with credit cards, it works a little differently. You're given a limit on how much you can borrow. You can charge up to that limit or charge nothing at all. And if you borrow it all and repay it, your credit is renewed, but only if you repay it. Once again, having good credit can help you get loans. With loans, like loans for a house or a car, you know exactly how much you're going to have to pay each month and for how long. It's smart to shop around for a good loan and get a good interest rate. Remember, an interest rate is how much money the bank is going to charge you to borrow their money. Generally speaking, the interest on loans is less expensive than the interest on credit cards.
So Chris, why is the interest on loans usually less than interest on credit cards?
Hey, that's a great question. I might not exactly know, but I'll give you guys a little bit of a difference though, okay? So when we think about loans, loans, you can borrow it for a specific amount or a specific item. The bank will charge you a specific interest rate, and every month you have to pay that at the end of every month, right? Typically, the bank will give you a fixed term, meaning it's going to take you, let's just say 1 year, 2 years, 3 years to pay off this car, right? But at the end of it, that loan is paid off, and then you're not good. If you wanted to, let's say, buy another car, you're going to have to apply for credit again. With credit cards, you just have to be a little bit more mindful. And I believe credit cards are a little bit higher risk. We call credit card revolving debt, right? You guys know what a revolving door is, right? So if you go to the hotel, that door that kind of spins around like that. Revolving debt basically, and it was shown here, is that if we have a credit limit for $1,000, right? $1,000. You borrow $1,000 this month, you pay it back. Next month, how much can you borrow again? Maybe we can put that in the chat. So if you have $1,000 is your credit limit, you bought something for $1,000, you paid it off. Next month, how much can you borrow again in your credit card? We got 2,000. Remember, our credit limit is $1,000, right? $1,000. Let's see if anybody else can chime in. Thanks, Herbert. Anthony says 1,000. Yeah, so it's $1,000, right? And that's what revolving that means, is that if we're able to borrow, pay it back in full next month, we can borrow up to the same amount again. The thing is though with credit, guys, is that, if you have $1,000 that you can borrow, right now, or use, let's say, to buy 3 game. How hard is it to get a PS5 today? It's so hard, right? How many anybody have a PS5, PlayStation 5, or read the Xbox here? I don't have one, but let's say you bought 2 of those, right? Next month, when the bill comes, you're gonna have to pay it back. So one of the things I always remind our young adults is that, hey, although you can buy today, to Jane's point, all those nice clothes, you have to remember, right? It's a bill. It's our responsibility to pay it back. So we want to be really mindful and certain. And great job, guys, for answering the question as well.
Yeah, and just because you can spend $1,000 doesn't mean you need to, especially if you only have a certain amount in your budget, in your spending plan of how much you can pay on your credit card every month. So, it would be a good practice to pay it off in the full balance every month. But if you can't do that, like Miss Rhonda did, where you separated out, like every month I'm going to pay $25, regardless of, maybe her credit card company says you only need to pay $10 back. But if you have it in your budget for 25, you get it paid off quicker and you're charged less interest. If you spread it out longer on your credit card, you're going to be paying a lot more money in interest because your balance doesn't go down that quick. So, yeah. Are there any questions in the chat? Okay. Let's go to the next.
Okay, so maybe credit is a little ways off for all of us, but now is actually a good time to get ready for having good credit. It all starts with a budget, and that's something we can start now. If you think of your budget as money that you lend to yourself and you keep to the limits of your budget, later you'll have what it takes to manage credit responsibly.
Right. All right, so we talked about a lot of stuff today. We talked about, what good credit is, what bad credit is, what the banks look at and other lenders when it comes to extending credit report, really what the cost of credit is. Like, so you may be buying that game for $199, but if it takes you a couple months to pay it off, you may actually be spending, $210, $220, depending on how long it takes you to pay off that bill. So you're really going to want to ask yourself when you buy things on credit or with a loan, if you really, really need it, or if it's just something that you want. And, there are some things that you have to get. So, and some things that will help you in your future, like a computer, or, when you get to college, you may have to take out a student loan, but there's also scholarships to apply for. So there's lots of choices out there, and just the more information that you know, the better prepared you'll be when you start getting all those choices as you get older. And one thing that we've always said is talk to your parents about this, talk to your family and your friends, and you maybe ask them about how they learned about credit and if they have any, and and share this lesson with them too, because I'm sure that there might be some things in here that they don't remember, or that they didn't think about, because there's so much that goes into credit. So Chris, is there anything else that you want to make sure people know about credit before we see if there's some more questions out there?
I would just encourage everybody. So have great conversations with your parents, learn from their experiences as well. Start early. I think that's one of the things. I mean, you don't have to start now, but start with having great conversations, right? And making a good decision, because it is a big responsibility. But when you're comfortable and when you're ready, starting out early does make a big, big, big difference. Um, when I actually moved here from the Philippines, and I moved here when I was in my I think late 20s. So maybe I'm telling you guys my age. But yeah, I moved here in my late 20s. So when I moved here, I had zero credit, right? Because I was much older. So one of the things I was really excited about was that when I got that $200 credit card, was that I was able to begin my journey of managing credit. Obviously, fast forward to today, and thankfully, I've been able to do it, manage it really well. Um, it's allowed me to be able to, um, you know, um, get a car, right? Buy a house and so forth. But all of that took a not a long time. It did take some time, right? So patient start with your checking savings account, manage that well. And when you're ready, start to be able to have those credit conversations. You can have to start build that long history. Um, Couple more things is just, keep it really simple, right? Pay it on time, pay what it's just encouraged as well is that although you have and please, although you have a credit card and your credit card is $500, that although you have a card that will allow you to buy something for $500, right? You want to make sure that you also understand that although you can buy it, you do have to pay it back, right? So although you might have a very nice limit when you start out, it doesn't mean that you can buy this for free, because that's where the responsibility and trust comes in, where, hey, at the end of it, you're going to have to pay it. And if you're not managing it well, that's where the cost, the late fees start to add up. And the history of you being able to pay on time gets shortened. Remember, guys, the due date on credit cards is once a month. And if it's once a month, in a year, how many times will you make a credit card payment when it's due? How many times in a month, right? I'll wait for the chat, but we know the answer. That's 12. 12 times to have I always picture it as a green check mark. 12 check marks in a report. If you look at a report in a year, is that a lot? It's not really that much, right? So you want to make sure you have all those green 12 check marks, because if it's green, it's red, it's green, it's red, could look a little hazy, right? So just keep that in mind. Um, Obviously, I think some of my information will be available. I'm excited. Maybe one day I get to see you guys, and I'm always, if you visit me, I'll be always welcome that as well.
Great. Thanks. Thank you, Chris. So I want to see if Mr. Hines or Mr. Whitmore or Dr. Rayford or Miss Rhonda have anything else that they want to highlight with the students.
Mr. Hines?
Can you hear me?
Yes.
Yes, I just wanted to say, I hope you guys are enjoying these sessions. This is a really important. Every week we bring you something to add another tool into your toolbox. Credit, as you can see, is very, very important. Making payments on time and taking care of your credit is your financial future. Credit is king. Credit is even more king than cash. So please take advantage of these opportunities and put another tool in your toolbox so that you can have a prosperous life. I hope you guys are enjoying these sessions, and we would bring them to you every Saturday to keep you updated on your financial future. Have a wonderful day.
Mr. Whitmore?
I would also like to add, if you guys don't mind, a little personal story. I got a lot of stories. My son graduated out of Desert Oasis High School. And prior to him going to college, now this is my wife, not me. Talk to your parents. My wife got him a credit card in his name. So it's in his name, not our name. And she kept the credit card while he was in college. So he did not have access to the credit card. My wife used the credit card when he came in town and then paid it off. He started, as Mr. Chris said, like with $200 or $300. When he graduated college, he had a $5,000 line of credit. And because his credit was good, when he didn't come back to Vegas, he went to San Diego. That's another story. But he had good credit. His credit score, his FICO, FICO's the credit score. His credit score was higher than mine. Mine's around 780. His was 810. And we'll get into that later on. But when he had to get an apartment, they took him with no problem. So I wanted to tell you that story.
Very good. Thank you for sharing. Mr. Whitmore?
I can't top that story. Thanks, Brother Rayford. Nothing for me to add other than
Well, you got
another
two
great
sons.
lesson. Oh, I have them. I'm putting that off as long as I can.
I hear you.
But another great lesson. Thank you, Chris, and thank you, Jane, again for your information. This is so valuable for the students, and I'm happy they're here and they continue to learn. So I won't add any of my little personal stories. They'll bore you to death. Thank you.
Okay. Mr. Koch joined us late. Mr. Koch, would you like to say a couple of words?
I'll just say one thing. I mean, I think it's good for the students to understand credit and relate it back to one of the lessons previously, like the budget one. So if you have your budget, it doesn't mean that when you get a credit card, you just throw your budget out of the window. You still have to, as Clifton said, that's another tool in your toolbox, but you still have to go back and say, what was your budget? What are you spending on? What goals do you have? And it might look like it's way so far out in the future that you'll be thinking of taking a bigger loan for a car, for a house, etc. But small steps will get you there, and that's what I would like you to take from this class. Thank you.
Fantastic. Well, we'd like to say thank you to all the students that joined us today. We'd like to say thank you to our special guests, Ms. Jane Pavick and Mr. Christopher Hernandez. Thank you so much. And thank you to the money team at the 100, Mr. Rayford, Mr. Hines, Mr. Whitmore, Mr. Koch, and me, Rhonda Nolan. Thank you for sharing your Saturday morning with us. We will see you next week. Have a great day. Bye-bye.
Bye-bye.
Thank you,
Thank
Thanks,
you.
everybody. I appreciate it.